Hello everybody, this is Lara from Pure Elliott Wave with your Monday to Friday update for Bitcoin and XRP. I'm going to start with Bitcoin as per usual. Let's look at technicals on the daily. I'm zooming out a little bit so that you can see the context. There was a pretty obvious strong upward trend, and within this upward trend we have periods of what look like parabolic growth with that typical slow start, acceleration through the middle and explosion at the end. I call it a J curve. That's what it looks like when it does that. Looks like a capital letter J. And you see that in bull markets, but you do not see that in bear market rallies. So this is a bull market, and we had closes to new all-time highs at daily, weekly and monthly timeframes. All of them had support from volume. Classic technical upward breakout. This is very bullish. Following that classic upward breakout, we've got now sideways movement, a very slight downward bias. This is the lowest low, and these highs are lower than these highs back here, but mostly sideways. So this fits beautifully as a rectangle pattern. Rectangles are classic analysis patterns, and they are unfortunately plagued by lots of false breakouts. So you have to be very careful when you are expecting a breakout from a rectangle. We saw what looked like a downward breakout here. It closed below what was support at 60,700, but then price very quickly returned back within the rectangle. So this was a false breakout. We could see a false breakout to the upside, and so once we see a close above 73,100, I may apply a 2 or 3 day away rule depending on the strength of upward movement in order to have confidence that the upward breakout is not false and we are indeed on the way up in the next bullish run. Because this rectangle is occurring in the context following upward strong movement, it's most likely 2/3 to break out up, but 1/3 of them will break out down. That is a lower probability outcome. So that is the risk to this analysis at the time. And here is your risk, 58,200. If we see a close below that and then 2 or 3 days away below that point, we can then have confidence there has been a downward breakout. Look for support on the way down at these identified support levels, 55, 53 and 51,000, and so on below that. If we do see a downward breakout, I would then calculate a target based on the rectangle pattern, which would probably be about 43,000. So I wouldn't expect necessarily a huge bear market. I'd expect a sharp, deep pullback within the ongoing bull market to about 43,000, and then I'd expect the larger bull market to resume. Prices swinging from resistance to support, a couple of tests of resistance here. Now a successful so far test of support about 60,700 with the lower wick of the candlestick for the 24th of June, 58,200. So beautifully sitting on those previously identified support levels. The 26th of June is a bullish piercing reversal pattern, or 25th, sorry. It doesn't have push from volume, but that's okay. Bitcoin's bullish reversal patterns don't always have support from volume because it will start its trend slowly, accelerate through the middle and explode at the end. So that means its lows are ridiculously difficult to identify, and that's one of the things that makes them so difficult, is the bullish reversal patterns commonly don't have support from volume. Now we're seeing 3 days of sideways movement. This is a little bit too early to consider potentially a pennant pattern. It should last a few more days if it's a pennant forming here, but I will keep that in mind. And if it is a little pennant sideways pattern forming, they're continuation patterns, and that would expect a downward breakout. So I'll keep that in mind, and if I can see what looks like a pennant forming, I'll show you in the next few days, and then probably Monday, and then I will calculate a short-term target for you. What's most likely to happen, I expect now, is Bitcoin has seen a downward swing that's found support identified at the lower edge of the rectangle, and now it's going to have an upward swing to resistance. Look out for the upward swing to be choppy and overlapping like this one was here and like this one was here. That's really typical behavior during consolidations. One of the things that differentiates successful traders from new people who are learning to trade, who will wipe out their accounts at least once or twice before they learn good risk management, is when you decide to not trade. Some very experienced traders find consolidations like this actually quite easy to trade. They will trade the swings from resistance to support and back again for these relatively short-term movements quite successfully, particularly when, as in this case, the areas of resistance and support are clearly delineated and long held, so they have good technical significance. So they'll go short or sell at resistance, buy or go long at support. Now that seems pretty obvious, but the problem here is the multiple false breakouts of rectangle patterns mean that your risk is really difficult to manage unless you're very disciplined. You can see price break above resistance, stopping out a short position only to then turn around and move lower towards support, and you wish you'd held on because your stop was too close. So you have to set your stop or your risk a little bit beyond support and resistance to allow for those false breakouts, reducing your risk reward profile. So you have to know how to manage risk. Now, the other problem with trading consolidations like that is they're really choppy and overlapping. Price just won't move in a straight line. This is a bit of a straight line. It's a bit unusual, but that's really not the norm. And so your short or long positions are going to fluctuate wildly along the way up or along the way down, requiring quite a calm, measured approach and really good risk management. For those who are new to trading, this is one of the times to step back and avoid the market. Often it's the trades you don't take that make the difference between profit and loss. This is a time to be patient and wait and develop your approach and develop a plan and be ready to execute it. I don't day trade anymore. It just does not suit my personality. I really don't like it. I find it too stressful and it interferes with my lifestyle. I don't want to be tied to my computer like that. But when I did day trade, this is one of the things I really like to do. Identify a resistance and support zone like this. When price is at a high, I'd enter a short position and I'd just hold it. And when it entered a low, I'd enter my long position and hold it. And I'd hold until a breakout. And when we got a breakout above resistance, I'd close the short position for a small loss and I'd have a long position that had a bigger profit. If price closed below support, I'd close my long position for a small loss and hold my short position, which already had a greater profit. If I had moved my stops to allow for overshoots of support and resistance, and 3% is a good rule to apply there, 2 or 3 days away and 3%, so allow for a reasonable bit of movement beyond support and resistance in your short and long positions. That's one of the little techniques I used to quite a lot. I used it quite successfully on US oil a fair few times, and it was quite a nice way to approach a situation like this. Now, not everyone is going to do that. I'm just telling you that's what I used to do, but I don't do it anymore. I just buy and hold for the very, very long term. That's my approach with cryptocurrencies. And my final thing to say about this little lecture today, I hope it's not a lecture, guys, but my final thing to say is if you're learning to trade, for goodness sake, do not do it in markets with extreme volatility like cryptocurrencies. The extreme volatility means the risk is really, really high. Learn to trade on a low risk market like the euro-dollar pair. That market is much more slow moving, a little bit more easy to analyze, much lower volatility. You can really reduce your risk because risk management is the most important and overlooked aspect of trading. Learn good risk management and you're more than halfway there to being a successful trader. Go read some books on it. It's really important stuff. Okay, here ends the lecture. So I'm expecting overall an upward swing, and let's see how price behaves if and when it gets toward resistance 71,500 to 73,100. Price is moving sideways for the last few sessions with declining volume, pretty normal for a little sideways movement. A little bit of a pause after that strong downward movement ended on 23rd of June with a little bit of a volume spike and an increased range and volatility and that increase in volume. Now, downward movement in this rectangle has previously ended with strong volume. It could have happened here, it happened here, it happened here, a bit of happening here, but it didn't always happen, didn't happen here. This increase in volume could indicate that this downward swing may be complete. But on balance, volume gave us a really strong bearish signal suggesting we might have a downward breakout from the rectangle, but price is unable to break below support so far. We did have some follow through because the signal came while price was in the middle of the rectangle, not close to the lower edge, not close to support. On balance, volume and price both moved steadily lower after that signal, so the follow through could be complete. But I'm going to tell you that this is a big indication of risk. We could be seeing a downward breakout from that rectangle. That's what this signal probably most likely should be read as. That's the risk. If you're considering a position at this time, and be very aware that is a big risk at this time to the short side. ADX tells us there's still a downward trend in place. RSI reached oversold, however, so because this is most likely a consolidation within a bull market, when RSI reaches oversold during a consolidation in a bull market, that tends to be the end of it. So this is a strong indication that contradicts the signal from on-balance volume. So this analysis is not clear at this time. Money flows neutral. ATR overall flat as price ended down toward that last low. I still think most likely we're going to get an upward swing to resistance for Bitcoin, but the risk is very clear to the downside. Yesterday I covered a new bearish Elliott Wave count that a member had given me a link to. Someone else published it on YouTube. This wave count is my main wave count. See cycle 1 complete here, cycle 2. Cycle 1 lasted 3 years, cycle 2 lasted 2 years. I'm going to draw your attention today to the problem of proportion. It's the proportion between waves of the same degree that gives your Elliott Wave count what we call the right look. So you have to have a good eye for proportion if you're going to get the right Elliott Wave count. At any point in time, there will be multiple Elliott Wave counts possible, and then you have to rank them in an order of probability based on Elliott Wave structures and the right look. This wave count has the right look. A first wave impulse lasting 3 years, a deep correction, a 96% correction of cycle wave 1 lasting 2 years. It doesn't look that deep, does it? That's because of the scale. That this is incredibly deep. It's a complete structure. It's got good proportion. It's very, very deep. The correction does not need to become any deeper. This has already been deep enough and long enough. This has good proportion. A third wave at cycle degree should be extended. So its waves, just like when you take a compressed accordion and then you stretch it out, when an Elliott wave extends, as you stretch the wave out, you can see the lower degree corrections at higher time frames. So here, the primary degree corrections are more brief. Here, this primary degree correction is much more time consuming. That's exactly what you'd expect to see as the accordion is stretched out and you see those folds within the accordion. As cycle 3 extends, it stretches out the subdivisions within it. You can see them showing up, taking more time at higher time frames. I hope that makes sense. So this wave count has good proportion. Primary 1 lasted a year, primary 2 just over a year. Really good proportion so far. Let's look at my first alternate, my preferred alternate. This sideways movement looks like a triangle. So instead of an impulse with 1, 2, 3, 4, 5 continuing, what if it's a zigzag A, B, C? Still seeing this as an impulse for A, still lasting about 3 years. Now, cycle wave B, lasting 6.25 years, is a complete regular contracting triangle. It's absolutely fine in the case of a triangle that the proportion is much greater to A, because that's what triangles and combinations do. They take up time and move price sideways. They do tend to be much longer lasting than impulses of the same degree, also longer lasting than zigzags. So an impulse lasting about 3 years and a triangle lasting 6.25 years is absolutely still good proportion. This sideways movement does look like a triangle. It has a perfect fit, and the final zigzag for primary E has completed. If it were to continue lower, it may not move beyond the end of C. That invalidation point is absolute. Note the invalidation point 0.2794 is the same for both my wave counts. They're both bullish, but the targets are wildly different. This is, you may consider, much more likely, and this is a really good solid Elliott Wave count. It's really valid, has a great look and a good proportion. So the target for this, not nearly as high as the target for the main Elliott Wave count. If you want to take this bearish alternate Elliott Wave count, for me it's an alternate, if you want to take it seriously, you must see a new low below 0.2794. That's when the bullish wave counts I've just shown you would be firmly invalidated, and then you can seriously consider this bearish scenario. Until that happens, you have to judge it as having a lower probability because of the problem of proportion. And this is what I meant to say yesterday and forgot, and this is why I'm covering it today. This Elliott Wave count is absolutely valid. It fits, it meets all the rules. It has some problems in terms of subdivisions, and I went over that yesterday. That reduces probability, but one of the big things that further reduces probability and makes it quite problematic is the problem of proportion. Here you have an impulse for cycle wave 1, which lasted 3.5 years, no problem there, but now you're considering a zigzag continuing even lower for cycle wave 2. It's lasted so far just under 8 years, and it's not complete. It's still got quite a way to go. Within primary 3, you've got 1 and 2 complete. You need to see 3 and 4 and 5. That's going to take several months, if not another year or two. Cycle wave 2 is going to be grossly disproportionate to cycle wave 1. Also, if you see cycle 2 complete here, the proportion is so good, it's already over 90% the length of cycle 1. It doesn't need to be any deeper. There's actually not that much room for it to move in. For this wave count, here's another point that's really important. I do not accept truncations unless they occur in the correct context, and I showed you the correct context in yesterday's XRP video. The correct context of a truncation is occurring just before or just after a very, very strong movement in the direction of the main trend. So here's a really strong movement. I could accept the end of primary 3 when you look at it at lower time frames. Its final fifth wave could have been slightly truncated in this kind of context. This is not the right context. I would expect primary C to move at least at or below the end of primary wave A. This wave count absolutely needs to see a new low to 0.1138 or preferably a little bit below, so that C avoids a truncation, possibly finding support at the lower edge of the Elliott channel, and the target is 0.33. This wave count has really bad proportion. It doesn't have the right look. I judge it to be absolutely valid, it's viable, but it has a low probability. Technicals on the daily for XRP, ascending triangle, breakout downward, target 0.4227. I've been warning repeatedly, you can't rely on that until we see a break below 0.46. There's strong support. Now we have around support, and today I'm going to identify a dragonfly doji, bullish reversal pattern, hammer candlestick, another bullish reversal pattern. Price continues to find support at 0.46. If we close below 0.46, then look for price to continue down to 0.4227. After the breakout, a backtest of resistance is absolutely normal to be expected behavior, and now we may see price continue lower, but it has to break below that 0.46 before you can have confidence. There's really strong resistance at 55 cents. False breakout here means we could see another false breakout. If we see a close above 55 cents, I will wait to see 2 or 3 days away above that before I have confidence in an upward breakout. While that hasn't happened, price is consolidating with resistance at 55 finally and support at 46. We need a breakout of that zone to have confidence in what direction XRP is going to go next. Volume for the short term is strongest on downward sessions, although overall price is moving mostly slightly lower with generally declining volume. There's not a lot of strength in this downward movement, whereas previously a lot of strength in upward movement. The larger picture still sees the volume profile favouring bullish movements. This slow downward sideways movement looks most likely like a consolidation. It doesn't have the strength you'd expect to see if this is a bear market. ADX today tells us that the downward trend for XRP is now extreme. RSI didn't get to oversold, but it got kind of close at the last low, so the downward trend could have ended there. Money flow didn't get close to oversold. It tends to not do that. There was an increase in ATR as a measure of volatility down to the last low, and so that could indicate, along with that spike in volume, that that downward movement could be complete at support, because cryptocurrencies do tend to end their bearish movements with some strength. Likewise, on the other direction, they'll end bullish movements with some strength. Now, they also will exhibit strength sometimes toward the middle of a movement in a third wave, and so that's one of the things that make cryptocurrency lows ridiculously hard to identify. It's often, not always, but often impossible to tell which of those two scenarios is playing out. That's it from me today with your analysis, and I hope you're all looking forward to a lovely weekend.